if you wanted higher returns than that, you would effectively have to invest only with Jeff Bezos or Elon Musk or something like that, which would of course give them a lot higher volatility, and in other universes probably not have worked out as well. My background is from management consulting, advising large companies, including banks and tech companies based out of London in financial matters and with a focus on valuation. So calculating how much companies are really worth. And that's important if you want to buy another company, if you want to understand how much your own company is worth, or if you want to understand, if we do this or that, what will that really deliver in terms of value to our company? And I've been investing on eToro since 2013, and today more than 25,000 people copy my investments with more than 70 million US dollars. And effectively since 2018, I've been doing that as the only thing. And now I have 4 assistants that help me as well. I've got a good network of experts that I can trust on different complex topics. If I invest in something, I need to either myself be an expert on it or know someone who is. I get very good support from eToro, including from Hadass and Toma that are on this call. If I have any questions or concerns, they're always really quick to help me. I subscribe to the best IT tools and data sets so that I'm always via APIs updated in the best way I can be. And finally, I'd like to highlight 3 of my favorite experts, my 3 brothers. So one of them here has worked for many years with AI for one of the largest tech companies in the world. He's a computer scientist. Now he works with regulation. The other one, he's an economist in the Danish Ministry of Finance, working on one of the biggest macroeconomic models in the world. And the final one is a CEO of a large marketing firm. So if any questions or concerns in these areas, then these are my go-to experts. Now, my investment strategy is based on some pillars that have been there all along and continue to be there. I focus on macroeconomics, so identifying what kind of growth rates there can be in different pockets of the capital markets. I look for mega trends. So these are trends that can grow for more than 10% per year for more than 10 years. I focus on fundamentals. So that means conducting due diligence and really getting a good 360-degree view of companies. What are their competitors like? What are their customers like? What kind of products do they have? What kind of services? What's their management like? What are their financial statements like? How are their opportunities in regards to different technological trends and so forth? And all of that with an eye on creating a discounted cash flow valuation. So understanding what kind of profitability can they really have in the future, and based on that, what are they really worth? And then I want to invest in companies that are worth a lot more than they cost. Then I focus a lot on the long term. And that's the most counterintuitive to people, the one that sort of people have the most difficulty in really grasping. There is a good quote from Benjamin Graham, Warren Buffett's mentor and the author of The Intelligent Investor, a good starter book for new investors. He said that in the short term, the market is a voting machine. In the long term, a weighing machine. And what that really means is that in the short term, it can be very important who thinks what and what you think other people think about what other people think. But in the long term, if a company becomes really big and profitable, then it's nice to be a part owner of that company. And of course, if you do well in every short term, you will also do well in the long term, because the long term is made up of a series of short terms. However, if you're running a company or a portfolio or even your life, it is better to focus on the long term and be sure you're rightly positioned for when the big things happen, rather than being, trying to adjusting for what happens every week. And if you focus on the long term, I evaluate you will have higher overall returns. That's historically been the case. However, if you focus on the short term, you'll have worse long-term results, but you'll have no better results in the short term either. So that's sort of the core case for long-termism. Then I focus a lot on risk management, keeping my risk at my risk appetite. So I want to get the highest return that I can across many scenarios at my risk appetite. That means diversifying well across many different geographies, industries, and business models. I currently have 61 different investments, with none of them making up more than 5% of the portfolio. If any of them ever make up more than 5%, it's either because I've evaluated, okay, I might be taking some extra risk here, but I think it's such a good investment that is worth this extra risk, or because it actually risk-wise fits really well to the portfolio. So you might have one company that will do well in situations where the rest of the portfolio would not do so well, and so that one might actually reduce the risk of the portfolio by having more invested in it. Finally, I hedge against tail risks. So that means risks that are very unlikely to materialize, but if they do materialize, then they could have an outsized effect. And so I like to have at least one asset that can protect me against any of these particular situations. Finally, I focus on keeping fees low. So that means that I avoid shorting, avoid leverage, and I avoid high fee instruments, and try to keep a low trade frequency. I pay the same fees as everybody else. So when I keep mine low, my copyists keep them low as well. Then there are some areas where I see great opportunities. These are particular in companies that have high organic growth. So that means companies that are selling more products or increasing the prices of their products, but it does not mean companies that are growing just through acquisitions. So quite often at the beginning of an annual report, you can read, oh, we grew revenue by 2% this year. And I know they've been acquiring companies, and I can see that actually the core business shrunk by 5%. So it's not very impressive. I especially like companies that are growing a lot if they have a high proportion of the costs as fixed. So that means that if they can keep growing the revenue, but the cost is not growing proportionally, then the profitability picture can look very different a bit down the line. And I do like companies that are profitable, or at least have a good route to become profitable, because at the end of the day, that's the best proof that you'll, to deliver value. Of course, one don't want to pay too much compared to the level of profits that I assume they can achieve. I like to invest in companies when they have a new strategy, because often you are paying for the old strategy, but you're receiving on the new strategy. When Ørsted, they announced that they were having a new strategy, they didn't just say they were having a new strategy. They also sold off a big part of the business. They changed the name of the company, and that proved to me they were serious about the new strategy. Because sometimes, you hear that there's a new strategy, but you need to see something to truly believe that it's going to be the case. Then I like companies that have great products, and especially if they are improving those products all the time. Sometimes you don't need to really predict the far future. It's sufficient that you can understand which are the good products right here and right now. So a classic example of failing to do that was when the former CEO of Microsoft, Steve Ballmer, he held the first iPhone in his hand, and he said, oh, it doesn't have a keyboard. Business customers won't like this. I'm very comfortable with our situation. And he was, of course, proven wrong by the success of the iPhone. And if you're a smart shopper, you're able to go out and buy the right product for yourself. You understand which features are important in the product category. Why you should pay more for this, but save here and so forth. Then that's one piece of the puzzle that's, that you've managed to fit in. And if you don't understand that bit, then it can be really hard to assess the value of a company. You can't even assess the value of their products. I like companies that are mission driven. Not just because I sometimes believe in the mission, but because it can be a great way to attract and retain some of the smartest people. You have some companies that are truly magnets for the best people and can get them without even overpaying, whereas others, they have their best employees are trying to get out of there as fast as possible. And you might not see the difference between whether companies in one camp or the other in the next quarter's results, but you probably will like 1 year down the line. Then I have a property that I rent out, and I have a big stock portfolio. And many of my copyists probably also have an apartment you live in, and maybe you have building a stock portfolio now. And that makes very good sense, because historically property and stocks have been the best two asset classes. Bonds have historically been okay, but with current very low interest rates and high inflation, they may not be as great as they have been. Commodities have never been that great, and currencies have been quite terrible. So whenever I have a lot of cash, I generally want to get it to the left of this chart as fast as possible, and ideally invest it in some stocks. Then when I look at the global economy, I like to start from the real top level perspective, high up in the helicopter looking down. And I like to look at the physical world. How many trees are there in the world? Where are all the metals? How much of each one do we have? What if we start mining at the bottom of the ocean? What will we find? And so forth. Really get a good assessment of what is the investment landscape. I look at life with a focus on humanity. How many people are there? Where are they? How old are they? How much are they aging in the different places? Which countries are going into a country with a very large working population, which ones are going into having many old people. If you have a company that has the right products for the right age group in the right place, then they have a big advantage. Then the scientific breakthroughs that are happening all around us can provide the basis for great investments, and also the ones that you can think of from science fiction or whatnot. You can have some thought about when might those actually materialize and what would happen to different companies if they did. I focus a lot on innovation, so which companies have made the newest best products and the best services, and which ones could be doing those in the future. There are some companies that are sort of slowly getting ahead of the competition. There are others where they are ahead on some best practices, but these are quite easy to catch up to. So they sort of slowly lose their edge over time. And whether it's one or the other, it can really make a big difference in terms of the profitability in the long run. Then one of the factors that can create or destroy the most value the fastest is trust. When you have a piece of paper that says you own your house, or you trust in the US dollar or any such thing, is a social construct. If we all believe in it, then it can help us cooperate with one another, trade with one another, and create a lot of value. But at the worst case, that value can disappear if we stop believing in some of these things. And at the worst example, you go into a restaurant and you want to buy a burger, and they say, we're not going to give you the burger before you pay us. And you say, I refuse to pay you before you give me the burger. No trust, no potential for cooperation, no transaction, and a lot of economic value that is not gained. Then there are some social movements that are very important and can drive a lot of value. If you have a house, you might think this house is very valuable. But if one day everybody wants to go hiking and live in tents and nobody wants houses anymore, then it's not that valuable anymore. So if you have some things that are, even if they're coming from the fringes of society, if they're growing at a high rate, it can really change what we value, and that can really change what you want to be invested in. Then when we take from the sort of a helicopter and look more at the detailed numbers, we can see in the global economy that GDP growth is, for this year, when you look at across some different forecasts, is expected to be okay, except maybe in Brazil. Interest rates are coming a bit up, but not necessarily to a too large extent. I'll just stay with inflation a little longer here. So until COVID, we effectively had in the US 1.5% inflation per year, which is below the target is that we must anchor long-term inflation expectations at 2%. So sort of every year where you have below that, you can almost think that you're building up a little bit of goodwill that, oh, if they're having it lower for this while, we're reducing the overall average. But then with a disruption period like COVID, we've had way too high inflation for a while, and we've sort of used up all our goodwill, and now we're building a little bit of a, just a little bit below ground, building up some bad will. But I think, if you have, I think IMF said 3.6% in the US this year, but if you have something like 4% this year, and then 3%, then 2.5%, then 2%, then 1.8% or something like that, I think that's sufficient to sort of ensure that you don't have a recession or any negative growth period, that unemployment doesn't really spike, and long-term inflation remains anchored at 2%. I think sort of you can achieve that in different ways, but I think that's a very realistic sort of way forward in the near term. And if you look at unemployment, then it's in most places lower than before COVID. In the US, you could definitely say that the central banks achieved its target on unemployment. So it is really the inflation one that should be and is the target now. In, for instance, Europe and Brazil, unemployment was high before COVID, it was high during COVID, and it's still high. So COVID or not, there are some other sort of problems there to be dealt with. Then there are some mega trends that I find extra interesting. If a company is riding on the wave of or driving one of these mega trends or one or more of these mega trends, then it's more likely to be found in my portfolio. So I like to focus on stopping global warming. Not every company in that field is good, but there are some that I think are very important to the transition, that are, with growth and profitability and everything, great investments right now. If even if you're in a quite bad region, it's now more likely that you'll die from an illness than from an invading neighbor country, even if your neighbor country looks very angrily at you. And so over the long term, we have for a long time seen health budgets expand way beyond military budgets, and it is just more and more if you care about security, it really, what is security? It's defending your life. Health is the key, and there are some companies that are already having amazing growth rates and profitability within that aspect, so many of them to be picked up and that are in the portfolio. The companies that have made the biggest breakthroughs in deep learning are in the portfolio. I think that's the most interesting technology that can be foundational and spur many other important things. Then in terms of the best industrial automation tools we have, and some of the sort of smartest new devices we're getting, the companies that have sort of maybe 5-10 years from now can be making some of the most interesting products also to be found in the portfolio. Then when sort of we've saved the environment and we're all healthy and AI and robots are solving everything, what do we want to be doing? Well, maybe we want to be focusing on gaming and fashion. In in the old days, you had cave paintings and then art and then music and then theater and then movies, but then with games you can also control things. So it's sort of the ultimate art form, unless you count life as an art form. And if you are in a period of warfare, humans can compete a lot over who is stronger, who has more military equipment, etc. But in times of peace, we can sometimes compete just as fiercely, and we might just compete over who has better fashion. And there are a lot of fashion companies that are having amazing growth rates, amazing profitability, despite not, and the stocks don't cost much, so they are to be found in the portfolio. Then when you've identified an industry or an ecosystem or a group of companies that looks interesting and you want to get sort of an overview of some of those companies, a great quick way is to look at the multiples. So this is an example of FANG, so Meta, Apple, Amazon, Netflix, and Alphabet. And so this is updated just an hour ago because, of course, after the market opened, Facebook took a bit of a dive on the latest earnings call. And if you look there, you can see in the top left corner, all of them have had amazing profit margins, but Amazon's lagging a bit behind. In terms of growth, they're all having double-digit growth rates, but Apple is lagging a bit behind. The two top charts, the higher the better, because they are effectively about profitability and growth. But the two bottom charts, the lower the better, because they are about price. So for Facebook or Meta, we are now paying only $16 for every dollar of profit we're getting. That seems quite cheap, but for various reasons, we may not like them. For Amazon, on the other hand, we're paying $65 for every dollar of profit. So we would only want to pay that much more for Amazon if we believe that they can increase or sustain their growth rate for longer, or maybe increase their profitability or something like that. Otherwise, we'd say, why should we pay more? And at the bottom right, we can see we're paying $5 for every dollar of revenue we're getting from Meta. But for Amazon, we're paying only almost half of that. But on the other hand, for Amazon, we're also getting a lot less profit out of that revenue. So that can sort of make sense. So that's a good way to get like a quick overview. I don't just look at charts. I'd like to look at big data tables. And in fact, that's what I look at mostly during the day. And those data tables can come through all my data providers via APIs, or they can be unique insights where I evaluate things. It's subjective but numerical. So it could be something like, how good do I think their website is on a scale from 1 to 10? Let me rate it. And all of this data and insights is used for my analysis, which are to make valuations. So how much do I think the companies are worth, and how do they fit together risk-wise? Risk scenarios to see, am I at my risk appetite? I also use the eToro risk scoring system to ensure that I'm staying somewhere between 4 and 5 on the eToro risk score. And those analyses are then used to make decisions. That can either be research decisions, so there may be a company that looks interesting, but I need to do more research on it to see if it's really interesting. If it then still looks interesting, maybe I need to do more research. Maybe I then learn something. Ooh, this looks like I need to evaluate all the companies based on the factor. Then I might need more data. Maybe I need to adjust the valuations and so forth. And then in the end, all of those analysis and research decisions have to lead to investment decisions. And that can be to, I have a company I've already invested, but I want to invest more, or maybe I want to have less invested in that one. Maybe there's a company I've never invested in before that I want to add to the portfolio. When you add up all those investment decisions, you get my portfolio. So if you compare that to the USA, you can see that in the US, it's not just one industry that is contributing all the economic activity. There are many different industries, and there are great investments across many different industries. In my portfolio, it's also split across many, many different industries with a bias towards tech, climate, metals and mining, and also recycling of metals, health, and gaming. And my current largest holdings are Rubis, Alphabet, and UBS. And you can always see my full portfolio on eToro, either on the app or on the website. So that was my presentation here. If you have any questions, then please write them in the chat now. If you don't have a question now, but you think of it one later, then you can always ask me on eToro or on LinkedIn, or you can see some of my other YouTube videos. And yeah, thank you everybody for listening, and I'll just look at the questions now. Yeah. What is your opinion on today's development in the Meta stock and in general regarding growth stocks? So I think with the Meta stock, certainly.
Can we also say the questions?
Yeah. So what is your opinion on today's development in the Meta stock and in general regarding growth stocks? So in general, regarding growth stocks, I think there are some that are incredibly good and I think have very bright futures, and there are others that I don't like at all. And there are some companies that I use myself. I love their products, I love their services, but I don't think they're ever going to have profit margins and a size that will justify the current price of those stocks. So those I'm not interested in. I think Meta is in the other category. Very high growth, extremely high profitability, very good sort of adaptive abilities to take on new things. And I think people might be a little bit misunderstanding what's gone on recently with them. So I think this drop in price may be maybe too much, but I'm not saying it's just going to be corrected in the short term. That doesn't matter too much for me. But I think in the long term, at the sort of price and the profits that they are likely to have and the sort of options they have, I think it's a very, very good good investment opportunity. What is your opinion on real estate investment trust stocks? Will you add one of them to the portfolio at some point in the future? It's certainly something that I continuously look at. I haven't found any where I really liked. I like the idea. I would like to have a real estate investment trust, but then when I look at the properties they actually have and their financial statements and so forth, I've just not found any that I thought were really that great. So if I at some point come across one and I look at the portfolio and I'm like, wow, they got properties here, there, and there, and I believe that these properties will be very valuable, then I will invest. But I'm not it's something I've looked into and I have not been able to find any that I thought were good enough investments. How will you adapt the portfolio if Russia will invade Ukraine? I mean, so the two most sort of, there are several stocks that would be impacted in different ways directly, and then the others that could be influenced indirectly. And how I would react would depend on the price changes. If, for instance, my iron mining company that I have in Ukraine, if that one were to tank completely, but I didn't see that they would actually be too demolished by it, maybe I would buy a lot more in that. But it could as well be that the price doesn't move and it seems like the situation becomes terrible. Then it would be the opposite. So it depends on what happens exactly and what that does to the price, whether the price really corresponds to the event. I would like to know if you think investing EFT, water, delivering, maintaining, recycling, planning sector is good long-term strategy for a portfolio. Don't know about that. Do you think Chinese stocks will recover soon? Are we in a bear market? I don't think we're in a bear market. I mean, it's in general, I don't like the terms bull and bear market because it's sort of a way people just say, like, markets are dropping. Markets have dropped. Next second they might be going back up again. So you can't sort of, when you talk about we are in a bear market, you're sort of assuming that because it's gone down for a little bit, that will continue, and that's just not necessarily the case. If it's gone down, it might go back up. If it's gone up, it might go down. It's not such that someone's doesn't matter, I guess. Your thoughts and feelings about crypto and how much will you invest in? So I have a little bit of Bitcoin, but otherwise I'm not too interested in the whole blockchain space. I think smart contracts are interesting. I think smart payment solutions are interesting. I think that there are many things where you can possibly make a decentralized solution to things, but I don't think blockchain is a very good technology. I think most crypto projects are not necessarily pyramid schemes, but they are. I don't think that you're effectively buying something that often does not have any value and probably never will, and people might not continue to like it, and so someone will be left holding the bag. But I think there are some something like Bitcoin is in pole position to be a big private currency, and if you can develop the sort of tier 2 technologies without getting into regulatory trouble to enable people to pay each other everywhere with Bitcoin, then I think we're in a new situation, and then it could achieve a much higher valuation than it currently has. What do you think about the metaverse? I think in the long term, that is where it's going. But I think it's a very sad state we're in right now. I mean, I first tried virtual reality when I was 6 years old in New York City. I had put on like a helicopter headset, and then you were in a helicopter and you had to control it, and it was quite fun, but not that good. Then I had the Samsung Gear, and then recently someone told me, you gotta get the Oculus Quest. Everything's changed, and nothing's changed. It's still not fun. People on average play it for like 15 minutes, then they get bored with it. You get motion sickness. You even people that say like, oh no, I love VR, it's like, how much have you played? And then when you look at the numbers, they haven't even played that much. People that are number one in the world in a VR game haven't even played that much to be number one. Talking about like 2 weeks worth of gaming is ridiculous. It's really not there yet at all. But that doesn't say that those are solvable problems in the long term. But it's sort of the state of it right now is a bit of a joke in my opinion. Only a portion of your remuneration from eToro comes from the fees and courtesy covers. Do you reckon that it is a sustainable situation? Yeah, I think I mean, it's been running the same way for a long time now, so I think that's very sustainable. I don't know, maybe it could be made in a slightly different way, but I think the current method sort of works quite fine, and I haven't heard sort of any talk about that it should be different. What are your expectations for 2022 in regards of the general stock market and for your portfolio? Keep up the great work. So in general, I don't care too much about this year or what's going to happen this quarter or even the next few years. When I invest in a company, it's because I evaluate that this company over its entire lifetime, from here on until forever, can deliver profits that when discounted to the present makes it a very valuable company. And when I'm saying a company is a great investment, it's because with my evaluations, evaluate that the weighted average of investors are wrong about this stock. And when I evaluate other people are wrong, I don't believe that it's most likely that they will all suddenly see what I see and all agree with me and give it my exact valuation within 1 year. So I'm really happy to when I buy an asset that I think is very valuable, but I don't care too much whether people will bid it up in the short term or not, or even bid it down. That might change which ones I wish to own, but it's not something that I try to make my predictions about. That said, I think it's important. Many people will always find something to be scared about. So before we had the financial crisis, then people were scared of a double dip. Then the Greek euro crisis, then people were scared, if Trump wins, it's going to crash. If we have Brexit, it's going to crash. Then an inverted yield curve. Or what about China Evergrande? What about COVID? What about the Delta variant? Now what about inflation? There's always a reason why people think it's just about to crash. Everybody always believes it's just about to crash, but most of the time it's just going steadily upwards and not crashing. And you know what? If you had gone back in time and you invested right before the financial crisis of 2008, you would have immediately lost half of your money. But today you would have made over 150% on that investment. So that would be a good thing. Like people that didn't invest right before the financial crisis were on average stupid. They should have done that, even though just because with the sort of long-term steady growth. And even though we need to bring inflation down, we're not going to bring inflation down to -2%, suddenly making money amazing. If you have all your money on average, it's going to get hollowed out by inflation over time, and thus you're better off having real assets that when there's way more money compared to the assets, then the prices just increase and thus save you from the inflation. When you have companies that are increasing their profits quite well and there's some inflation pushing up prices in general, that can be an okay state for companies. Now we are paying, I think Goldman Sachs said we are paying in the top 10% historically of prices compared to various valuation metrics, but also that on average that's been a good state to invest. So I think if you have historically earned 7% per year in real returns on your stocks, and you would earn 4% on bonds. Imagine now when you're paying slightly more compared to the profits, you might be looking to make only 4% per year, but maybe -1% on your bonds and -3% on cash. So then which one are you going to want? You're still going to want to hold mostly property and stocks then. It's not as great as it might have been historically, but it's still better than the alternative. What do you think about Ethereum 2.0? So, I mean, I'm really curious to see whether this is really gonna work out or not. I think there is a strong case for that that it will not really work out, but yeah, if it does, then it could be a complete game changer for crypto. How are you seeing recovery stocks like airlines, restaurants, cinema? I think some of them have some interesting price points, but a lot of them have some more, I think, long-term problems in terms of how profitable they can really be. All of them are sort of not really fit for what consumers want in the future. So you might have some that have an okay growth rate now and are decently profitable and whatnot, but none of them have really amazing futures, I think. Would you consider closing Tilray for a loss? Certainly. I mean, whether a company is at a loss or in profit doesn't matter too much. It can be a little bit of a tax matter. If you close one, then you can deduct that from your other ones to reduce taxes a little bit. But fundamentally, it doesn't matter to me whether Tilray did good or bad. Overall, I've made a lot of money on my cannabis investments. The first one I got many years ago was Kronos. Bought that when it was just a tiny little farm, basically with a house. Then, I sold that near the peak. Then I bought Afria later. I thought, oh, all my cannabis analysis are now wasted because, that industry came and gone. But then the prices went down and I bought a lot more and I made a lot of money on that again. Then when I had Afria and Afria merged with Tilray, unfortunately, I kept Tilray, hoping that Tilray would become more like Afria, but instead it seems like Afria has become more like Tilray, and that's really unfortunate. But with all those unfortunate events, and of course, given that we haven't seen the big opening up of cannabis in America that we could have hoped for under Biden, and it now seems like that's at least another Biden term away, and it's just something that neither Democrats or Republicans are that keen on at the moment. So with that, the company's worth a lot less, but also the price has fallen a lot. So sort of, where does that leave us? With now we have a cheaper company that's not as great. And if suddenly that there is something else that I would think would be better, I would sell it and buy that. But on the flip side, it could as well be that if suddenly the price is even lower without anything changing, or some things are changing and the price stays the same, then I would buy a lot more. In a long-term strategy, when do you think it is okay, or what percent to take profits? So I don't think you can. I don't really like the terms like now it's time to take profits. You always it's always day zero in investments. Like right now, what do I want to own? That's based on which assets do I think can deliver me the highest returns in the future. Now, if I needed the cash for some reason, then maybe I would have to sell something, and then I would sell whatever least attractive thing to hold. But it's not something like, oh, now I made 10 times my money on my Apple shares. Now it must be time to sell. No, that's in the history. Question is right now, with that money that you have invested in Apple, is that how you want it to be invested? Maybe you want to invest more in Apple because you think that they have an even more amazing future now. Maybe you want to have less, but it doesn't make any sense to evaluate it based off of, oh, did I own it for 1 year or 5 years, or have I made this much or that much? What matters is how do you want that money placed right now? Like because yeah, whenever you're the past is sunk. It's like called a sunk cost. That's already happened. So that doesn't matter. The only thing you can use the past for is as data for making the best decisions going forward. And then you got to decide, how do I want to allocate my money right now? Hello, Jeppe. How soon you will reach the eToro block of the maximum funds which your copy has invested? I'm afraid that might be I think I'll hit the 75 very soon, and I don't know how long after, if they'll set a date or if it'll just be automatically blocked, but it'll be soon. How could you stay reasonably untouched by the recent small storm in the markets compared to other PIs? So I have much better diversification and risk management than many other large hedge funds, banks, as well as other popular investors, I think. So many large companies that think that they're well diversified really aren't. A terrible example I once saw was one that had lots of different companies in lots of different countries, but they had one thing in common. All of them were about to be annihilated by Amazon. So their portfolio was really not that well diversified after all. So I think that's the sort of overwatching. In specifics, the companies that were the most hurt here were some of the unprofitable high growth companies, which I have a smaller proportion of. So that was the specific reason why I was not as hurt. What is your opinion regarding the current inflation levels and the overreaction from the Fed? How will this affect the market going forward, 1, 2, or 5 years? Well, it's good that we have the sort of 1, 2, or 5 years aspect of that, because quite often, if the Federal Reserve does something, then sort of like then the market might react to that. But if they don't, then the market might still react, because it's like, the Fed hasn't done it, so that means that they could be doing it. So it's sort of nothing's really off the table. And I think so far it's I think they are doing the right thing by not trying to bring down inflation at a too fast pace, but doing it at a sort of moderate pace. That's the way to avoid a spike in unemployment and avoid a shock to the economy on top of COVID here. And I mean, doing it this way is fundamentally why we have central banks. If we had politicians, then they would not be able to do it in this way. But because we have central banks that are able to, in times of normal economic times, to keep inflation low and build up this goodwill that can be used to steer the economy through a crisis like this. Like that is why we have central banking, and they are doing it. Yeah, I've had other times where I was in disagreement, but I must say I think they're doing the the right things here, and that is why the most realistic scenario is that we'll have sort of sluggish growth, high but not too high inflation, and slowly declining, and okay profitability and so forth, thus leaving the market on average as the best place to have your money invested, and quite likely with some companies doing very well based off of other changes that are not necessarily related to the wider economy, but just based off of making technological breakthroughs or absolute blockbuster new products and services. What is the best strategy on adding funds to top the copy? It is to, before I reach the copy block, to add funds for at least $600 with copy open trades ticked. That's generally the best. Now, different investors are different, and some people have different preferences and time horizons and all of that. So I can't really, but the general case is that that's the best way to do it. Once the copy block is instated, then it's no longer possible to tick to add funds copying open trades. So then, then it's no longer a question of what is best, because you only have one option at that point, which is to add it copying new trades. And then a lot of those funds will remain idle until I make new trades. And then if I do a resync where I sell everything and buy it back, or sell a large part of buy it back, then at that point there'll be a big a lot of the money will get invested then. What is your long-term intention with eToro? Where do you see yourself in 5 to 10 years? So my base case is that I can stay ahead of other investors for another 10 years. I currently think that I've built a really good system. I've found some great people. I've got a good network. I have sort of not all the knowledge that I want to have, but I have a good chunk of the research that I have wanted to do. I've gotten it done, and there's sort of I have a tiered list of what I need to know. So with all of that, I think I can stay ahead for a while. But maybe one day I'll look at the markets and I'm trying to find some great investments, to get a bit better return. Every day my goal is to get rid of my worst stock and find one that's slightly better. And one day I'll just look at the market and I'm like, where's my edge? Everything seems priced correctly. There's nothing in my evaluation are not yielding any new insights. At that point, I will convert the portfolio to a boring, well-diversified portfolio with the focus on minimizing tax burdens and trading costs and other such things. And maybe I can stay ahead of the game all the way until I'm as old as Warren Buffett. But I think, the base case is that maybe I can do it for 10 years. But I also realize that, at one point, I might look at the markets and I might realize that, okay, there's nothing that my evaluations are adding here, and I have to convert the portfolio at that stage. And then that might be okay. Maybe at that stage, many of my investors are older, and maybe they want a more boring portfolio at that time. And then that's what I'll be able to deliver. I doubled my investment with you during this call. Keep up the good work. That wasn't the question, but thank you. Do you think that today's dive in Facebook is a real opportunity to trade in? Good fundamentals, bad sentiment due to disappointing earnings report. So I think I like Meta very much, and that's why I have a big investment in it. And I think at any you have here some, I would say, bad news and also a big price drop. So it's not necessarily a much greater entry point. I'd rather have the expectations from before at that price. Now I think this price drop is of course really nice. It does mean that one can increase one's Meta holdings at a cheaper price, and I don't think that this quarterly call revealed any really terrifying information that changes the long-term trajectory of Meta. Would you still diversify the same way if you had only a small amount of money to invest? Thanks for your work, Jeppe. So the reason that I have generally stated the minimum of $600 is that eToro will not execute trades smaller than $1. So with $600 or more, then this strategy is fine. And yes, then I want to have this level of diversification. Remember, diversification is a free risk reduction. When you diversify, you're not reducing your average returns, but you are reducing your risks. And when you're reducing your risk in one place, it means you can take more risks in others. So I could take 10 stocks that individually seem like awful investments because they're so risky. People are like, how can you invest in this? There's all of the, how could I have Tesla in the portfolio with this wild ride it's been on? People were saying, but the CEO is crazy and this will never work. And this is, I could only have that extremely risky stock because it was one among many other stocks. So I said, oh, it doesn't matter if one of them does badly. And in fact, I can have stocks where I say, even if many of my stocks fail, you know, in very long story. 120 years ago, the first $1 billion company was created with the U.S. Steel, and then, during my investment career in 2018, I saw the formation of the first $1 trillion company when Apple hit the $1 trillion market cap. And maybe at the end of my life, or towards many years from now, I'll get to experience the very first $1 quadrillion company. Now, which one will be the first quadrillion dollar company in the world? Maybe that one is already in my portfolio, or maybe I'll manage to add it along the way. And if I can just find that one, then my overall return may end up being extremely fine, even if there were some risky ones along the way. But that can be the power of diversification, that in that mix you've diversified across, you might just get that one that becomes the quadrillion dollar company. What is the purpose of having an eToro limit for copying you with open trades? When you occasionally open up for new copyers, allowing copy open trades, does that mean that people stop copying you, leaving room for others, or is eToro increasing the limit? So the limit has been steady at 75 million US dollars. So generally, because people drop off for various reasons along the way. That's the main reason. Also, if there's a big market decline, if I'm just at $76 million and the market declines by 10%, then it would go below it as well. And then at some point, eToro opens it up. And then as I hit it, at some point they set a date and then it'll be closed. And what is the reason for it? There are several advantages to doing it that way. The most important one is liquidity. So sometimes when I place a trade on a small stock, there simply are not enough shares available. So I just get a rejection saying we couldn't place this trade. Effectively, if sometimes if there are not enough stocks for sale, eToro has to call Goldman Sachs or someone and ask, can you please put some more shares in the market so we can buy something, which will change the price quite significantly. There was one trade I wanted to make where I was informed that this would cause a 2% change in the market price if it was executed, and it was too much. So if of course if I'm buying shares in a company like Apple or Meta or something like that, it doesn't matter at all because there's very significant volume. But for some of the smaller stocks, it's simply not possible to make such a large investment for so many people in one go. With many companies, even at the 75 million, there's issues, but by breaking the trades into many smaller trades, I've sometimes managed to place the trades for me and all my copiers. Oh, let's just skip some. Do you only have eToro copies, or do you also have clients outside eToro for handle? No, only on eToro. I have many people, even famous people, write to me on LinkedIn saying, "Oh, I sold my company," or "Oh, I'm blah blah blah," and my family, and we would like to invest with you. Is there some way outside eToro we can do it? And I always have to say, no, I don't provide financial advice. I don't do educational seminars. I don't have any fund outside of eToro. I focus on one thing. There's no plan B. I have a very good plan A, which is to manage my money on eToro in the absolute best way I can. I focus 100% on that, so that many years from now, if I look back at it, I will not wonder what would have happened if I had focused more on this. No, I gave it everything. No plan B, no external things, no write a book, no nothing. Just invest the best way I can. And I believe that by focusing 100% on that all the time for a long time, I have an edge over others. Hi, Jeppe. What do you think about buying bonds, more specifically long-term bonds? Is it a good investment? Thank you a lot for your work. I recently looked through a large list of bonds, seeing how have the yield to maturity and coupons changed, which companies are, issuing which kind of bonds at which rates. And I must say, I don't think they have not reached a level where they are interesting yet. It's something always to keep an eye on, because at some point it could be that bonds become interesting again, or there could be some particular bonds where if you have a very safe company that for some reason is actually offering quite a high yield on the bond, then and you have a portfolio of bonds that includes a lot of an overweight of that kind of, then it could be interesting. But yeah, it's simply not the case at the moment, based on my evaluation. Could you share what kind of your own personal wealth is allocated to your eToro investments compared to things outside eToro? So I'm focusing 100% on managing my eToro portfolio. I make all my money from my eToro portfolio, and that's my main thing. I also have my big property investment, pension, and some other things, but it's really that takes up none of my time. I focus 100% on eToro. All right, I think that was the last question.
Great. So Jeppe, are you done from your point of view?
I think so.
Brilliant. Okay, so thank you very much, Jeppe, and thank you everyone for joining. It was fascinating as usual, and yeah, we'll see you all next quarter.
Thank you,
Have
everyone.
a great day,
Bye.
everyone. Bye bye.